Brent crude is hovering around $92 per barrel mark even as faint signs of progress in nuclear talks between the United States and Iran emerge. If US sanctions are lifted, Iran could export millions of barrels of crude and help to drive down red-hot oil prices. However, the move may not be enough to cool off the prices as tensions remain high in Eastern Europe. Crude prices have rallied about 20% this year and 16% in the past month as tensions between Russia and NATO simmered over Ukraine. Technically, if WTI March holds $91.6 level, it could rise up to 93.6 levels. Analysts worry oil prices are headed higher and can hit $125 a barrel by June 2022 given these tensions and a pickup in demand over the months ahead. Platts Analytics, for instance, expects India's gasoline demand to grow about 5% in 2022 after rising 12% in 2021. JY Lim, advisor, Oil Markets S&P Global Platts Analytics said India's gasoline demand had already recovered back to above 2019 levels. The resurgence of COVID-19 in the country is expected to slow down in Q1, but we still see growth for the whole of 2022 as the situation starts to improve. Mobility seems to be picking up as daily infections have started to ease. But rising crude oil prices may not be all that bad news, especially for companies that are engaged in drilling and extraction of oil. These street mavens are bullish on the road ahead for oil drilling companies such as ONGC, Oil India and Reliance Industries, which could gain from a rise in crude oil prices. Another sector that is likely to benefit is electric vehicles, as people may opt to buy EVs instead of vehicles that run on conventional fuel. We have with us A.K. Prabhakar, Head of Research at IDBI Capital, to elaborate on it.
ONGC, Oil India, to an extent, even Reliance gets benefit from that. And Hindustan Oil explosion, because all these companies, they depend on it. Pipeline companies will benefit because GAIL, GSPL, these are pipeline companies where they will not have any impact. So any company which is there in EV segment like Sonacom, and there is one more, Endurance Technology, which is a supplier for EV. Because more the crude prices go up, EV vehicle will take off. So there can be few things, sir. Not the impact of crude. We need to take it also. Because when crude goes down, nobody increases the capacity, and everybody were lethargic this time. So I think 100 is very sustainable for some time, and it will have an impact on our market.
Technical chartists too remain bullish on these stocks from a medium-term perspective and expect these stocks to gain between 10 and 15% in the next 6 to 8 months. Let's go to Business Standard's Avdut Bakkar to know more.
Nifty Oil and Gas Index is currently witnessing consecutive resistance placed at 7,800 and 8,000 levels. On the lower side, 7,200 remains a strong support, and as long as this index honors this support, one can see a recovery in the upward trend. Stocks like Bharat Petroleum, Hindustan Petroleum and India Oil Corporations are witnessing sideways movement, and either side breakout would determine the next course of action for these stocks. Whereas stocks like ONGC and Oil India at the current juncture, looking at the different formations and the chart patterns, these two stocks are really placed well. ONGC, as long as it holds support of 160 level, it can see a jump of 15% and can see a level of 200 rupees. For Oil India, which is having a formation of higher high, higher low, it can easily jump to 260, a jump of 10%. These two stocks, ONGC and Oil India, according to the charts, are on the process, are holding the bullish bias.
A mild dip in oil prices and bond yields on Tuesday did cap downside in the markets yesterday as benchmark indices snapped their 3-day losing run. The BSE Sensex is now at 57,808 while the Nifty 50 is at 17,267 as global headwinds keep investors on their toes. Today, investors will react to Q3 earnings of Bharti Airtel and IRCTC announced post-market hours yesterday and will eye quarterly results of ACC, Berger Paints, Nykaa and Tata Power among others.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.